Hi friends, welcome to EduTap. Today we are going to discuss some important MCQs relating to the basic aspects of accounting. Now this accounting, it's a fundamental topic of commerce, and now in different competitive exams we are being asked about this particular topic, and many students, especially from non-commerce background, they are facing difficulty in understanding the basics of accounting. So today we are going to discuss the basics of accounting, and that too in the form of MCQs, so that you come to know what kind of questions they can be asked from the basics of accounting. We are going to discuss the MCQs in detail. We are going to cover the basics in detail. So this discussion is going to be very fruitful for you, especially if you are coming from a non-commerce background. So let's start our today's discussion. So let's start with the first question. And the question is, which is the last step in the process of accounting? So now this is the first question, and we are asking about what is the last step in the process of accounting. So you can be sure that after solving this particular question, we are going to cover all the steps involved in process of accounting. So options are identification, recording, measurement, communication, or none of the above. So friends, to answer this particular question, we have to be aware about the basic aspect, the basic concept of accounting. So what is accounting? Now, if you talk about accounting from a layman's perspective, it simply means that you are keeping record of your transactions. You are earning some money. You are keeping a record of from where you are getting this money and from where you are spending this particular money. And if I talk about it from a business perspective, so suppose I start a business, I start buying phones and I start selling mobile phones. So suppose I am buying a mobile phone at rupees 10,000 and I'm selling it at rupees 12,000. So what I'm doing, I am buying phones and I'm selling them. So I have to keep a proper record of these mobile phones. So suppose during the year I buy 100 phones, I sell 90 phones. So what I have to do, I have to keep a proper record of it. I have to know that how many phones are still in stock with me. I have to know how much profit I have made from selling these 90 mobile phones. I have to know from where I have already received the payment and the people who still have to make me payment. So I need to have proper records with me. So ultimate objective is to maintain proper records so that I can know different things related to my business. So I can say that the users of accounting like me here, we need certain information. We need certain information for different purposes: to know the profit, to file income tax return, to file a return with SEBI if I'm a company. So for all these aspects, we need to maintain proper records, and these records, they are being maintained through the process of accounting in a very systematic manner. Now, we cannot record each and every transaction in our books of accounts. I am buying a mobile phone worth rupees 10,000. This I have to record in my books of accounts. But suppose I am hiring a new employee, I am hiring a new salesman, I cannot record this transaction in my books of accounts. If I pay him salary, now I am going to record this transaction in the books of accounts. So first and foremost, I have to identify what all transactions are going to be recorded in the books of accounts, and then I am going to measure at what amount I am going to record this transaction. Suppose I am buying a mobile phone for my business, I am going to record it. At how much amount I am going to record it? At rupees 10,000 I am going to record it in my books of accounts. Now I sell a mobile phone, again I am going to record it, and this time I am going to record it at rupees 12,000. So first we have to identify the transaction, and then we have to identify the amount of the transaction. We have to measure the amount of the transaction, and then accordingly we have to record this transaction in our books of accounts. Now these days, this recording, it happens through accounting software. We have different accounting softwares. There is a popular accounting software called Tally. So we put in this transaction in this software and it automatically generates all the reports for me. If I have sold this mobile phone on credit, so I'm going to receive this money, say after 30 days, it is going to automatically tell me that you have to receive this and this money from this particular person. So all the reports, they are going to be available through Tally, and ultimately I being the user, I being the final user of this particular person, I'm going to get all the accounting information. So I believe we know what the basic accounting is all about. So now we can say that accounting involves 4 stages. So these 4 stages, they are involved here. First is identification. Identification means you have to determine what kind of transactions you have to record in the books of accounts. So suppose there may be a certain event, it may be very important to you. For example, say you get married. Now this is a very important event in your life, but you are not going to record it in your books of accounts. You have to identify what transactions are going to be recorded in the books of accounts. Only those relating to your business, they are going to be recorded, and not related to your personal life. Now there is also a particular concept which is called business entity concept. It says that the business and the owner, they are both separate people. You have to identify the transactions which are related to the business, and only those are going to be recorded in the books of accounts. So if I'm buying a mobile phone for selling purpose for my business, I'm going to record it in the books of accounts. Suppose my wife, I buy a mobile phone for my wife so that she can use it. She was insisting to buy the new iPhone. I buy a new iPhone for her. I'm not going to record it in my books of accounts because this is not for the purpose of my business. This is for my personal happiness, for my wife's happiness. So this is not going to be recorded in the books of accounts. Now the next step is measurement. We have to measure at what amount this transaction is going to be recorded. We have to measure it in rupees term because we are in India. If we were in US, we were going to measure it in dollar terms. So I buy a phone worth rupees 10,000 for the purpose of selling. So I'm going to record it at rupees 10,000. I sell a phone at 12,000. So I'm going to record it at rupees 12,000. I pay my salesman some amount of money. So if I'm paying him monthly salary of rupees 15,000, I'm going to record it at rupees 15,000. So in all these aspects, I was talking about recording the transactions. So ultimately, I'm going to move on to recording the transactions. I'm going to record the transactions. How I'm going to record them? As per today's scenario, we record the transactions through popular accounting softwares like Tally. I just told you about. There is another popular accounting software. It is BZ. There are many more accounting softwares that have come into the market. So you record these transactions in your books of accounts, which are primarily maintained in a computerized environment as of now. And after the recording aspect, what we get? We get different useful information. So we get to know how much profit we have made during the year. We get to know how much money we have to receive from different persons. I buy phones, but I do not pay for them right away. I just buy the phones on credit terms. I pay after a month, after 2 months. So I will get to know how much money is still pending to be paid to my creditors, to the people whom I am owing money. So this all information is going to be available to me after I have correctly recorded the transaction. So last step is communication. So all the economic events that I have identified, measured and recorded, ultimately they are going to generate some useful information, and that is going to be very useful for the users of accounting. So last step is communication. The information which is collected is communicated to the users of accounting. So this communication is going to be the answer of this particular question. So friends, now I can easily answer this question that communication is the last step in the process of accounting. After identifying, after measuring, after recording, you communicate this information. The accounting software these days communicates this information to the users of accounting. So last step and the most important one is communication. So answer is going to be option number D. Now moving on to the second question. The question is, users of accounting are popularly divided into which of the following two broad categories? So whenever we talk about the uses of accounting information, now accounting we are doing because we have to provide certain information to different users of accounting. Now these users, they are broadly classified as, you have to answer which of these two categories are there. First users and second users, primary users and tertiary users, direct and indirect users, internal and external users, or none of the above. So in the previous question, we talked about that accounting is going to generate useful information for users of accounting. So the user of accounting in a very small business scenario, like I start a business for mobile phones, the user is primarily going to be me, or it may be income tax authorities, or some near and dear ones to me who have given me money, who have given me loans. So they may be the users of the accounting information. But if we talk about from a company's perspective, today we are seeing that the companies, they are doing business on a large scale. There are different companies operating in India. Now the companies, they are maintaining their proper books of accounts, they are maintaining their proper records for internal and external users. Now internal users, they are those people who are sitting within the company itself. So the people who are running the company, they are related with the day-to-day affairs of the company. They need to know whether the work they are doing it correctly or not. So they are going to be the board of directors of the company, the chief executive, the CFO, financial officer, vice president, the different managers in the company, supervisors in the company. They may be the internal users of the accounting information. So they would know how well we have done. They would know how much commission they are entitled to. So suppose they are entitled to a commission on the sales that have been made. So they would also get to know what kind of commission it is going to be available to them. So they are the internal users of accounting information. And then comes the external users of accounting. So they are the people who are not coming in daily, sitting in the company. They are outside the company, but they still require accounting information. Now you might be wondering, what do the outsiders have to do with the company's accounting information? Now I am asking you this particular question. Suppose you invest some money in the shares of Reliance. So you invest a good chunk of money. Say I say you invest rupees 10 lakh in Reliance. Now you are not an insider, internal user of the accounting information of Reliance. You are sitting outside Reliance, but still you would need to know whether the Reliance, it is working profitably or not, how it is utilizing the money that you have put in the company. So this information is also going to be needed by the external users, the investors of the company, the shareholders of the company, the people who have given loan to the company, the banks, the financial institutions, the tax authorities. They are also going to need the information. So Reliance is making crores and crores of profit. So the tax authorities want to know whether it is properly calculating income tax and properly paying all its tax dues. Similarly, different regulatory agencies are there. SEBI is there. It wants to know whether it is properly complying with all the legal regulatory requirements which are there. It wants to know whether the company is fulfilling its corporate social responsibility. It is spending a fixed percentage of its profits for certain welfare activities. Similarly, the trade associations, the labor unions, the stock exchange, and sometimes even the customers, they may be interested in knowing the different important accounting information from the company. They may be interested in looking at the profitability. They may be interested in looking at the assets and liabilities of Reliance. So these all aspects, they are also relevant to external users of accounting. So we are going to classify the users of accounting information into number 1, internal users, and number 2, external users. Now, as we discussed on the previous slide, we have seen that we are going to categorize the users of accounting into 2 broad categories. One are the internal users, which are there in the organization itself, and the second are the external users. They are the users who are outside the organization. So the correct answer is going to be option number D. Moving on to the next question. Which of the following are referred to as the qualitative characteristics of accounting? So like each and everything, like you and me, everyone has some qualities, and so is the case with accounting. We require that accounting should have certain qualities, and we are being asked what are those qualities that should be there in accounting. Options are reliability, superiority, understandability, and comparability. Reliability, relevance, measurability, and comparability. Reliability, relevance, understandability, and comparability. Reliability, relevance, understandability, and suitability. So we have to identify the correct 4 characteristics of accounting. So there may be different characteristics of accounting, and we have to answer what are the primary, what are the basic qualitative characteristics of accounting. So this can be like understood as, so suppose you are looking for your spouse, you may be looking for different characteristics to be present in him or her. Now there will be certain basic characteristics which you would definitely want from him or her. So these basic characteristics are also found in accounting. We want that accounting should at least have these basic characteristics. So we are being asked about those characteristics. So friends, there are 4 qualitative characteristics of accounting. So these 4 characteristics, they are: number 1 is reliability. So it means that whatever accounting information we are presenting, it should be reliable. So suppose the books of accounts of Reliance, they show a profit. You take a look at the statement of profitability of the Reliance, and it shows a profit of rupees 10 crore. Now this profit should be reliable. You should be able to rely on this particular profit. You have to be sure that this profit is accurate. And we maintain this surety by doing a statutory audit of the Reliance company. So the company appoints its auditor, a chartered accountant is going to come, it is going to verify the proper transaction, it is going to verify that proper records are maintained, proper documents, proper evidences for each and every transactions they are maintained. And so we are going to know that okay, this profit is 10 crore which is showing in the books of Reliance Limited. It is a reliable figure and we can depend on this information for the purpose of making our decisions. If we want to decide whether we want to invest in Reliance, we may say, okay, the profit is really good, I'm going to invest in this company. Now the next is relevance. The information must be relevant to the decision making needs of the users. So I have to provide all that information which is going to be useful for the end users. So suppose what I do, I provide certain information in my books of accounts, which is that the director of the company bought a watch worth rupees 1 crore. I provide certain information that the salary to the employees was paid through bank account. So this particular information, it may not be relevant to the ultimate decision making needs of the users. I have to make sure I provide all the relevant information. I provide information relating to the profits that have been made by the Reliance. I provide all the information pertaining to the assets and liabilities of the Reliance so that the user comes to know what are the assets that the Reliance is holding. What are the liabilities? What are the obligations that the Reliance has? So all the relevant information is to be there. Next is understandability. I have to provide the information in a understandable manner. So whenever you open the annual accounts of the companies, you are going to see proper records, proper tables are there, charts are there. So they are prepared to make sure that the information is understandable by user. We prepare a balance sheet in a proper manner, in a very simple manner, so that even a layman can look at it and get some basic idea about what this balance sheet is trying to say. Then is comparability. So a very important aspect is comparability. So whenever you open the annual accounts of companies, you would see that the figures of 2 periods, they are mentioned in this particular statement. So suppose you are looking at the profitability statement. So if you are looking at the profitability statement of 2021, there are also going to be profits of 2020 shown along with it. We have to make sure that the user can compare this information. If the profits during 2021 were 10 crore, the profits during 2020, they may be say 8 crore, they may be say 20 crore. So ultimately you are going to come to know through the previous year's figure itself whether the company is doing good or not. If in the previous year profits were 8 crore, now 10 crore, the company is doing good. And if in the previous year the profits were 20 crore and now they have just become 10 crore. So now you may say that the company is not doing good. So to take proper decisions, you need comparative figures of at least previous year as well. So comparability is a very important qualitative characteristic of accounting. So guys, now we can easily answer this question that there are 4 qualitative characteristics to accounting, and they are reliability, relevance, understandability, and comparability. So correct answer is option number C. Now let's move on to another very important question. Fundamental accounting equation is correctly described as. So this is the fundamental equation of accounting. A question has already been asked in the SEBI examination with regard to this equation. So the options are assets is equal to liabilities plus capital. Capital is equal to assets plus liabilities. Assets is equal to creditors equity plus owners equity. Both A and C or none of the above. Now friends, let's talk about this very interesting concept of fundamental accounting equation. Now this concept says that every transaction is going to have 2 aspects. How many aspects? 2 aspects every transaction is going to have. I started the business of mobile phones. Say I buy 10 mobile phones worth rupees 10,000 each. I'm spending rupees 1 lakh. Now this 1 lakh I'm purchasing. The mobile phones I am purchasing on credit. I'm buying on credit. I'm not paying for them right now. So the mobile phones, they are going to be stock for me. My inventory is going to increase. The stock for me is my asset. Anything that I'm keeping in my shop for the purpose of selling, it is my stock. Stock is my asset. Something that I own, they are my assets. So this stock is going to increase by 1 lakh, but I have to pay 1 lakh to some other person from whom I have bought the stock. So my obligation is also going to increase by 1 lakh. My liability is also going to increase by 1 lakh. So the two aspects there were increase in asset and increase in liability. So every transaction is going to have these kinds of aspects. So this accounting equation is always going to be tallied. Assets are always going to be equal to liabilities plus capital. This is also referred to as the balance sheet equation. In the balance sheet, while we are preparing the balance sheet, on the one side we are showing capital plus liabilities, and on the other side we are showing our assets. So ultimately the total of both the sides are going to be equal. Whenever we are starting the business, we need some money to start the business. Suppose I start a new business. I bring in rupees 2 lakh worth of, I bring in rupees 2 lakh of cash with me while I start this particular business. Let's try to apply the accounting equation on different aspects of this rupees 2 lakh. So I'm bringing in rupees 2 lakh. So my assets, they are increasing by 2 lakh. Now this 2 lakh I'm bringing in as my capital. The money that is invested in by the owners of a particular business, it is referred to as capital. It is referred to as capital for a business. So what is going to happen? My liabilities, they are not going to increase, but my capital, it is going to increase by 2 lakhs. So the accounting equation is always going to be true. Now suppose what happens is, I buy furniture worth rupees 40,000. I buy furniture worth rupees 40,000 and I am buying this furniture on credit. I am going to pay for it, suppose 3 months from now. So what is going to happen? My assets, they are going to increase. My furniture is definitely going to be my asset. I am going to own this furniture. So assets are going to increase by 40,000. They are going to become 2,40,000. But now my liability has also increased by 40,000. I have to pay this money. And my capital, it was already 2 lakh. It is going to remain 2 lakh. Ultimately, both they are going to tally out. Now what happens 3 months down the line? I'm paying for my furniture rupees 40,000. Now what is going to happen? My assets, they are going to decrease. My cash is going to decrease by 40,000. My assets, they are going to come down to 2 lakh. Again, the liability, they are going to come down. Liabilities, they are going to reduce by 40,000. My capital is going to remain intact. So every transaction that is happening, it is going to affect either of these assets, liabilities or capital. And ultimately the fundamental accounting equation, it is always going to tally. Suppose, let's take another example. Suppose what you are doing, you are selling goods and you are selling goods for cash. So you sell goods worth rupees 20,000 and you are selling this for cash. What is going to happen? Your cash is going to increase, your asset is going to increase by 20,000, but your stock is also going to decline by 20,000. So ultimately your assets, they are going to remain 2 lakh and your capital is going to remain 2 lakh. So for every transaction, this is going to remain true. This fundamental accounting equation is going to remain true. Your assets are always going to be equal to your liabilities plus capital. Now for liabilities plus capital, we also have certain fancy names as well. The liabilities, they are also referred to as the creditor's equity, the outsider's equity. So the liabilities, they are the obligations of a business, obligations of a company towards the outsiders. Now this capital, it is the obligation of a business towards the insiders, towards the owners. So the capital, it is also referred to as the owner's equity. Liability, the outsiders or the creditor's equity, and the capital as the owner's equity. So there are different names which are also used in place of the liabilities or capital. So now we can say that this fundamental accounting equation can also be written as assets is equal to creditor's equity plus owner's equity. So friends, the fundamental accounting equation is assets is equal to liabilities plus capital, and it can also be written as assets is equal to creditor's equity plus owner's equity. So correct answer is definitely going to be option number A and C both, that is option number D. D is going to be the correct answer. So now let's move on to the next question. So friends, this is going to be the last question of our today's discussion. Now I want you guys that you should try to answer this one, because we've already discussed some of the basic aspects of accounting. We have discussed the fundamental accounting equation also. So this question is, a firm purchases goods worth rupees 10 lakh on credit. The transaction would result in. So we have seen that a transaction would impact different kinds of accounts. Basically, it is going to have a double effect. So the double effect is going to be on any set of accounts. It can be on any set of accounts, asset, liability, capital. So we are being asked how assets, liability or capital, they are going to be affected by this particular economic transaction. Whether the assets or liabilities both are going to increase, whether assets or capital they are going to increase, whether assets or liability they are going to decrease, whether assets or capital they are going to decrease, or none of the above. So just think about the fundamental accounting equation. You can pause the video, take even a minute and make sure you answer this one correctly. So friends, we know the fundamental accounting equation. Just try to write it yourself. Assets is equal to liabilities plus capital. So what is happening in the question? It says that we are buying stuff, we are buying stock worth rupees 10 lakh on credit terms. The stock, what is stock? Stock is my asset. And I'm buying it on credit terms. My obligation, my creditors, that the money that I have to pay in future, it is also going to increase. Stock increases by 10 lakh and my creditors, they also increase by 10 lakh. So the fundamental accounting equation is just being applied in this particular question. So I believe it must be very easy for you guys to solve it. So I believe you have answered this one correctly. If a firm is purchasing goods worth rupees 10 lakh on credit, this transaction is going to result in increase in assets. Your stock is going to increase and it is also going to increase your liability. You are purchasing on credit. Your creditors are going to increase. Your payables are going to increase. So correct answer is going to be option number A. So thank you friends. This was our today's discussion on some of the important basic aspects of accounting, some of the important MCQs we discussed, and I believe that you were able to grasp some of the very basic aspects of accounting through these particular MCQs. Now these questions, they are basic, but they are important from examination perspective, and I hope all the basic things that we have covered today, they are very much clear to you. And that's it for today. See you in my next video. Till then, bye bye, take care, all the best.